Just in time.
Ladies and gentlemen, I am JC Peretz, founder of AllStarCharts.com, and I am joined today by a very long-time friend of mine, a friend of ours, as I like to say, Mr. Kenny Glick. I'm very happy to be here with you. Thank you, sir.
Thanks for having me, my man. What's going on?
Look at us. Look at us. JC, Kenny Glick, live. Look at us. We made it. Oh,
Yes,
man.
yes. Feeling good,
Uh,
feeling healthy.
Listen, from happy hours in Midtown Manhattan 10, 15 years ago to watching you day trade every single day has been quite the journey. And, you know, I have a true appreciation, like you wouldn't believe, about the simplicity of your process. You are solving a problem that many of us have, myself included. I don't have the time, nor do I know where to look for the biggest movers of the day, the fastest moving stocks of the day every single day, and look for opportunities on multiple time frames. I just don't have the time or know how to do that. But you do, sir. Let's get right into it. The way I learned how to do this, Kenny, you got to give the people what they want.
Come
Just
on.
give them the charts. But why don't you tell them a little about yourself first?
Well, yeah, it's been a long journey. It's taken me 30 years to figure this whole thing out, but the last 12 years has actually changed my life because I did find something that solidifies and, just crystallizes whatever I want to see. But yeah, I've been doing this a while. I started as a shady stockbroker back in the boiler room days. And when day trading got started, it was so's bandits. We didn't even look at charts. It was basically just looking at time and sales and getting a feel for market makers. So as we evolved and I'm kind of like the grandfather of the industry at this point. Back in the day when we had fractions and they changed it to decimals, trying to tell us that it was all for the mom and pop to get a better price on their Microsoft. That's absolutely bullshit. They changed it so high frequency trading could evolve, and also quants, and what we do today, just algorithmic trading. Most of the markets run on algos, and watching the evolution has kind of made me a better trader to this day. And now I just stay focused on the algos and just watch the money go by and join in.
Love how you're referred to as the grandfather of day trading, and it only hit me until recently that day trading never existed before you.
Yeah,
Like,
I think we kind of coined the phrase. Again, when I was taught by a guy named Isaac, and he was trading in the '70s, and some of the stuff, just like reading the Reminiscence book, and everybody's got that book on their desk, and the Stock Traders Almanac. All those cliches and all those stories of you put them all together, and they still play out today. But again, being able to say that I've been doing this for 30 years, I've seen the evolution. I know what's important. I know what to focus on, and now, just shoving it on the algos, you just become the machine, and that's how you trade nowadays. Especially if you're doing it, minute to minute like we do, or hour to hour.
we can legitimately say that no one has done it longer than Kenny, which is pretty amazing. Let's get right into it, Kenny.
Yeah.
We got to give the people what they want. They want to see the charts. They want to see the winning trades. They hear about it. They're seeing they're seeing everything coming through the tape. Everyone's all excited. Let's actually walk through what's been happening over the last few days. Show them what these trades were.
Sure, man. I think we got a couple. There was a couple of days ago. I think it was maybe a couple of weeks ago. And at this point, Humana. Again, this is why I love what I do, because one person's disaster is our opportunity. As a day trader, I come in liquid and loving it. I'm sitting in cash. Big Al, my dad, he's the QQQ investor. I'm just sitting here playing the game. I love the casino. So again, I walked in and the news was, oh my God, have you seen what's going on with Humana? I was like, ooh, what's going on with Humana? Never traded the stock before in my life, never looked at a chart. Bang. It took me 5 minutes to find an opportunity because all I'm looking for is the price action. That's near and dear to your heart. But what you're looking at right there is two lines on a chart. And that's all I've been using since basically 2012. So we're going on 12 years. So when I say somebody's disaster is our opportunity, again, I'm not buying the dip per se because I think this is a good idea or a good company. That blue line is the volume weighted average price, or what some of us like to call the money line or the institutional money line. that is when the big players are getting involved. Not, again, us day traders, we think we're big players, but we're small fries. We're just getting involved. But right there is a chance where you could take advantage of a stock that's getting absolutely hammered, and you're getting involved in a trade where you're limiting your risk. You know where the stock is going to go. So just to jump right into it, this was a stock where the VWAP was telling us to buy it at around 220, and that orange line, which is our special sauce, that's just an aggregate of VWAP. I like to call it the multi-day VWAP. Some are throwing it out there with different names. Just call it the multi-day. I've discovered, again, from the school of hard knocks and just watching these charts every day, that if you get involved at VWAP, you have limited risk. And again, every trader, you want to know a couple of different things. Why am I buying this? Where do I think it's going? And more importantly, what am I going to do if I'm wrong? And that's the risk reward. That's the money management. It's built into trading around VWAP. So if you're buying at the blue line, which was roughly around 220, that orange line was 19 points away. And in this chart, it shows you where it eventually ended up. That orange line was there before this trade started. So if you're buying something at 220 and you're risking 2 points and you're expecting to make 22 to 29 points, hello, there's your risk reward. And again, look how beautiful this trade was. You see how it never violated back below the blue and inevitably got to the orange. So we're talking roughly, $220 stock that went to 239, and you were risking $2. Awesome. Awesome.
Yep. And that risk versus reward profile that you mentioned applies across different time horizons. So what I really love about price behavior analysis and execution is that the same principles that are applied at longer term timeframes can be applied intraday as well. Let's talk about Clover Health. So this was 2 weeks ago, right. CLOV.
Yeah.
But here you got the money line and the multi-day VWAP at the same levels.
Yeah, it's subtle there, but we jump across. I think I had a slide I want to show you where I found this idea. Can you go to the next slide? Take a look at this. So when I started looking at VWAP, and I understood how it worked on a daily basis, but when I started putting it on these longer time frames, this is a 3-year VWAP, and you see how this was just an awful stock. I kind of like the Andy Dufresne trade, I like to call it, just wallowing in the muck, trying to come out the other side into glory and freedom. So when this stock presented itself, I said, hey, this thing looks like it's going to be pretty good. So when you see the long-term chart, then you go back to the short-term chart and you say, okay, we got an idea here. And then you start focusing on the daily. Look at what this stock did. Just with a measly 10 cents of risk, you were buying the stock around 280. It got over the blue and over the orange. So when you see that, that's the algos telling you not only is this good for today, but it's breaking prior day VWAP and prior day VWAP. And look at the trend that it went into. It's a $2 stock that basically, 280 went all the way up to 360. And just amazing, the percentage gain, obviously. And this is a day trader's dream because, here, instead of buying a couple of thousand, you could buy yourself 10,000 shares for 30 grand and you make yourself 10 grand on this trade. It was pretty awesome.
Okay, so this was the outcome and this was the execution. But Spencer, if you could go back to the original setup, and I want to reiterate that Andy Dufresne pattern that he alludes to from the great movie Shawshank Redemption.
You got it.
There it is. So what we're seeing there is that long-term VWAP going back to those prior highs from several years ago. Yeah. The market is stuck below that, just grinding in the mud, right? Or worse in the case of the movie. And then ultimately gets above that longer term VWAP. This is the multiple time frame analysis. This is something that I preach and have for many, many, many years. Multiple time frames. Not many ways to study markets allow for such a thing, but price behavior analysis does. So then we go to the next slide, and you could see that in fact, what ended up happening is that it was setting up on a shorter term time horizon within the context of that longer term change in trend. That's beautiful, Kenny. It's beautiful. You got it.
And that's again a lot of times when you think of day trading, you're just looking at that chart for the day. No, I find all my ideas off the longer term charts. That's why I got involved at AMD at $2.50. I've been involved in the Carvana, thank you if you're still in that one, at $7.50. While everybody was talking about shorting it, it was coming out of the Andy Dufresne over those VWAPs. And I was like, Why would you be shorting a stock that's down 80% already? This thing's got potential to go to 120, maybe 190. And I heard it's at 190 now. And people thought
You,
I was
you, you heard
insane.
you heard it here, folks. First, folks, you don't want to short the Andy Dufresne.
No.
Now, moving right along, king of
Yeah.
nicknames here, Mr. Kenny Glick, the
Oh.
Warlock. We're going to be talking about the faux show bro. I kid you
Mm.
not, folks. This is a real thing, and it's JC approved, by the way. Very
Nice.
much so, in fact. So, Mr. Kenny Glick, explain the faux show bro.
Faux show, bro. If by any chance my buddy Barry's out there, a buddy of mine, we kind of nicknamed this together. It was the fake out, FO, and the shakeout, SHO, and then the breakout, the bro. Faux show, bro. So when you find, again, it's pattern recognition, which is, and if you haven't heard, I might be the universe's #1 pattern recognition trader. Somebody once told me that. But when you see the faux show, bro, underneath the VWAP, that gives you the added incentive to get involved. Because think of it this way: when the stock's breaking down, as you see under the red line, the shorts get encouraged because it looks like it's going to roll over. The longs who have stops there, they're getting stopped out. So when it reverses again, you have the shorts who say, oh no, I think I just made a big mistake. And the longs, they get their FOMO. Plus, you have the algorithms that kick in when you get back above the 1 minute and that multi-day. And what's beautiful about this chart, it shows you everything you need to know about this pattern, because you break the VWAP and you don't go parabolic right away. You come back to test the VWAP, holds the VWAP, confirming it again, and then you get liftoff. So beautiful pattern. And again, when you know where to look and you know what to look for, these patterns show up all day.
So I have to mention something, Kenny. Again,
Yeah.
I mean, I feel like I'm so annoying at this point because I'm talking about multiple time frames, something that we look at, risk reward profile, something we look at, talk about every single day.
Yeah.
The whipsaw is so near and dear to my heart. From failed moves come fast moves in the opposite direction. You know, these whipsaws, we see them across markets, across time frames, across asset classes, all over the globe every single day. And the fact that, you know, this further reiterates that markets are fractal, as we like to say, having that, you know, breakout, that first attempted breakout, the fake out, if you will, the faux,
Right.
and then it shakes everybody out. The shorts get excited on the show, right? The shakeout. Yeah. Shorts get excited. Anybody who bought long gets stopped out, right? Shorts are getting excited. And then what happens? The actual breakout, the bro, faux show, bro. Now we get the actual breakout. So what's going on in that actual breakout? Those who got stopped out are no longer in the trade and have to get back in. Those who are short have to cover their shorts. All of those are buyers. But at the same time, you've got the faux show bro community stepping in because they're seeing this breakout happening, which causes even more shorts to have to cover, which causes even more of the original faux, the original failed breakout people that are no longer in the trade, that causes even more FOMO. So it's the FOMO show, bro, is really what it turns into.
Say
and
that.
It absolutely rips. And we see it across time frames.
I dare you to say that fast 3 more times. FOMO show. I don't even think I do it,
bro.
Yeah, I like it. I like it.
So I just want to tell you that this really speaks volumes to me, pun intended.
Right on, right on. Listen, I mean, again, you nailed it. I mean, obviously, you know about trading, and that's it. You know, the market, you know, the way I look at the market, it doesn't want to let you make the money. It's trying its best to buck you off. It's like a bucking bronco, and you got to hang in there. So when you see that pattern, you got to hold on for dear life, because the bull or that horse wants you off its back. You got to ride it. And again, a lot of traders, when you do get faux showed, and you understand that, oh, wait, that just happened to me. Because sometimes you're a victim to the trade, but you see it shape up and you say, okay, I got to put aside. I got butt hurt for a second there, but now's the time for the breakout. I got to get back in. And that's why that trade really follows through so well.
That's right. It's not a bummer. It's an opportunity. And
Right
so, you know, based on these first three charts, people out there might think you're a permabull, Kenny Glick, but those who are familiar with Mr. Warlock over here know that he's the furthest thing. And here we're looking at a short, right? So it's not longs only, shorts too.
Yeah, I love shorting. And again, but I've learned the hard way. Shorting is short-lived. and you're going to die. That's kind of going to put that on my epitaph right there. And I learned it the hard way. The market doesn't really want to go down. It has momentary lapses of reason. Speaking of Pink Floyd, but those opportunities present themselves as longs inevitably, just like Goldman Sachs. But we'll talk about this. Kramer was saying this the other day on TV. You don't want to trade around these earnings reports because ridiculous moves happen. Why would Goldman Sachs sell off? Who cares? I'll tell you why. Because people were in this thing from $480 and they walked in and they won. They had the good earnings report that people were betting on. So I come in, I'm waiting for those people to take some of that profit. And when does that profit ensue? VWAP. So right here, and again, this was one of those trades where if you came in and you were prepared for it, very simple. If you don't know what you're looking for or where to look, you missed it. But look at this. Here's the VWAP break, and I like trading it right as it broke that pre-market pivot. So again, I didn't nail it right at the VWAP, but right there, and again, risk reward presenting itself, the orange line was 14 points away. So here I'm risking $3 to $4 on a trade. And again, if it's a $500 stock, you're going to have to risk 3 or 4 points, but you wound up making 10 to 12 on the trade. And look where it did for the rest of the day, kind of just gravitated between the 1 minute and the multi-day. So most of that trade did happen right out of the gate, but we were right there because we're preparing for these trades. Me and my crew, we're preparing for these trades, 8 o'clock in the morning, 7 o'clock in the morning when the earnings come out. So great trade.
You said something really important there, Kenny, is preparation.
Yeah.
If you don't know what to look for, if you weren't prepared for this coming into the day, then it's impossible to catch this. So if you have like a list of stocks or you're trying to day trade, one thing, these opportunities are going to be few and far between. You're almost never going to find these opportunities. When you're going to find those opportunities are probably when they report earnings. So why don't you just look for the stocks that are reporting earnings? And as it turns out, we got quite a bit of earnings coming up here, Mr. Kenny Glick. A lot of earnings you can see this week. Wow, 421, 84, 115, 152. Wow, look at this. So many earnings over the next few weeks. So what that means is, some people look at earnings like landmines. They try to avoid them. You flock to them.
Yeah, because this is where you have, again, what are we looking at? We're looking at volume weighted average price. So when is the most volume is during earnings season. But also when you see these numbers, 84 companies reporting earnings, 115, how the hell am I going to whittle down that list? Me. I love it because I've been staring at these things for my whole life. And again, I know which ones move best. You don't want to go where there's illiquidity. And I know which ones to stick to. So, again, that's why Goldman Sachs, I was telling my friend, I was like, we waited 3 months for this trade. Don't miss it. Again, because that one notoriously fades. But again, when you see all these names and numbers, all these companies reporting, I just basically know which ones to focus on because, again, you want the ones that are most liquid. You have, the ones that have options. You don't want to trade these weird, illiquid, the small cap stocks. But again, this is my time to shine. I love this time of season.
So it's a lot of filters so that we boil it down to 2 to 4 names, which is what I absolutely love. All right, folks, let's take a step back for a second. Kenny has walked you through 4 very successful trades. And I think, to me, one of the biggest takes has to be the preparation, right? Knowing what to look for before the market opens so that when things happen, we can execute and take advantage of that. I absolutely love that. We talked about these different lines, the money line, the multi-day VWAP. Why don't we talk about what this actually is? I think it's really, really important for you to understand exactly what it is that Kenny's looking for. So Kenny, if you wouldn't mind, explain the money line here, the language of the matrix. Talk to me.
Yeah. Well, again, I joke around about how we're living in a simulated reality because, again, I've been staring at screens my whole life, and it's almost just like I am Neo and the Oracle and all that. But VWAP, the reason it makes so much sense to me is that, again, I'm not going to give you the intricacies of the mathematical code, what it is. Let's just say VWAP, moneyline, whichever you want to call it. But as I've watched the evolution of trading, there's no doubt that people are using this now because it works. It's an institutional tool. So again, for someone like me who's buying 1,000 or 2,000 shares, I'm an insignificant flea. I want to know where the institutions are moving their money. And again, when VWAP is explained to me, when I first heard about it, again, for instance, if you were working for my hedge fund and I want 400,000 shares of XYZ on the books, your job was to beat the VWAP. So if something's underneath the VWAP, you're just sitting there going, all right, cool, Kenny wants this on the books, but then it breaks over the VWAP. You have to start buying frantically, and that's why that VWAP break works. And now that the algorithms are doing it, and you see a late day VWAP break, and obviously you guys know late day buying is institutional buying. That shows you the real strength. The stock could do nothing all day. That late day buying, when you see it, and especially if you see it breaking VWAP, there's your go. That is just that was my first VWAP trade that I ever found. That late day buying, giving you institutional trigger, and then bang, you're in. So again, just keeping it simple, it's the institutional money line. It's telling you where the real money's going into the trade, not just my 2,000 shares of XYZ or whatever it is.
And I got to tell you, you can anchor these VWAPs as long as you want, but the 1 minute VWAP, I could tell you for a fact, I went to Fairfield University, an hour from New York City, right in the heart of hedge fund capital of the world, Greenwich, Connecticut. So between college buddies of mine, local buddies, future buddies of mine, when I was working in New York City, 22, 23, and ever since then, these guys, especially the younger guys, are executing orders. You have big mutual funds. You have big hedge funds that are calling in orders. I need to buy 1 million shares of XYZ. I need to buy 500,000 shares, 10 million shares. I need a lot of shares. Now, if you are the executing trader to fill that order, your benchmark is the volume weighted average price for that day. So if the volume weighted average price is 90 and your average fill is $90.50, you suck at this. And next time that hedge fund wants to enter an order, he's not going to call you. He's not going to call. He's going to call the guy that when he called him and said, what was my final execution? His price was below the VWAP, right? He beat the VWAP. So what ends up happening is when price is ripping above that VWAP, these guys are chasing because they're getting bad fills and they're not going to get the next order, and that's bad for business. So when we talk about how markets react around different moving averages, that doesn't exist with the 200-day moving average or the 50-day moving average or anything like that. The money line is real. That is a fact. And I've been spending 20 years down in the New York Stock Exchange visiting friends, doing TV, never working there, but I'm there all the time. Guess what they've been doing at the specialist booths? They have been using the VWAP, the volume weighted average price, particularly for the day. I've seen it. Less and less these days. There's not really many people around anymore. But nevertheless, whether they're on the floor or at their computers, this is what they're using. That is a fact. I've seen it with my own eyes. It's fascinating.
Right. And a lot of it is just pre-programmed. Again, it's almost as if some of these stocks are preordained to what they're going to do. And again, once they break over the VWAP, you're nailing it. But now again, they have it programmed, so they're not sitting at the desk or yelling about it anymore. It's just pre-programmed. So once it breaks the VWAP, you're off to the races.
I love it. There are anomalies in this market. We know that asset prices trend, momentum exists. And the volume weighted average price is the money line. There's no question. All right. So, Kenny, while we have you here and we're on the conversation about VWAP, why don't we finish up here with the 5 pillars of successful VWAP trading? This is, I think, hilarious that there are 5 pillars, but this is fantastic. First one, important. Let's go.
Yeah, we'll bang right through it. Again, if you don't have a good platform, again, I like using Thinkorswim. I think Thinkorswim has, the more data feeds. So you're getting a nice crisp VWAP, as I would say. And again, they do have what we call scripts. So you could program in, something that I have, what I call the multi-day. We've been using the same script for quite some time. And again, you want to have a platform that's pretty quick. You want to be able to just, get in, get out. Some of these trades, again, some of these trades are 5 minutes long. Long-term investing to me is about an hour. So you want to have a good platform to make sure you're trading on them.
Yeah, a lot of the guys internally for this sort of thing use TradingView, particularly for the VWAP. We use Optima, we use Koifin, we use Thinkorswim, Tasty Trade. Pretty much these days, most platforms have the anchored VWAP. TradingView and Thinkorswim. Also, TrendSpider is another one that some of us use. Also, I know Sean really likes TrendSpider too. So there's a bunch of them.
Yeah, and what's out there? I mean, VWAP's now kind of like standard. You even see it on
It
Yahoo
is.
Finance. I mean, they even have a yacht. You can get multiple time frame on Yahoo Finance, which is interesting.
All right. Pillar number two, this one near and dear to my heart with everything I do, risk management, being nimble. Let's talk about the execution.
Yeah, that just lends to, again, which platform you want to use. I'm a point and click kind of guy. So when I have the market maker box, I just click the price I'm trying to sell it, and it sets my stops for me. It sets where I'm offering out the stock. It's just click this, click that, hit buy, hit sell, and limit, and I'm in and I'm out. So again, like I said, some of these trades are real quick. Some of them take a little bit time to develop. It's not always this lightning quick trade where if you miss it, you're out. And again, like I showed you on that other chart, sometimes you're breaking VWAP and you're coming back and you're getting 15, 20 minutes to make that decision. You don't have to be lightning quick, but you definitely want to have a platform where you could get in, get out, set the stops, set your offers, and not have to worry too much about what you're doing.
Well, why don't we talk about setting the stop? So,
Sure.
being nimble in terms of executing the initial trade, man, to me, just as important, if not more important, is then the second trade that's put on, which is that stop loss, letting the market prove that you were wrong. And by the way, it doesn't need to be wrong forever. It could be the foe of the faux show bro,
Right.
which those trades end up being more powerful than just a regular VWAP breakout. So having the stops is very important. It doesn't mean the trade's over, right?
Absolutely. And you know what I tell people is like, you don't want to get out. And again, this is going back to when I started trading, the same stuff. My guy said, he's like, why would you get out of your entire trade all at one price? You're being arrogant. You're telling me that that's going to be the best price to get out. Even when you're losing, you don't want to get out at one price because of the faux show, bro. The market's out there hunting for your stops. Guys, those programs are out there. When you get a stop out, it goes, man, it went right to my price, got me out, and then it left without me. Yeah, because there's programs out there. So the only way to battle that is multiple stops, and that's right on the chart generally for you. And if you get into a trade and you're immediately right, then you could just trail it with the VWAP and prior day VWAP. Again, most of the trades are really, really similar, but once you start to see the pattern recognition meets the VWAP, the stops are right there, prior candles, and then you start offering out the names, and then you're just sitting there waiting for the trade. While other people are getting jiggled out and shuffled out, you're sitting there going, that's my money now. So
That's right. You don't want to get Andy Dufresne.
you don't want to get Andy Dufresne, or you don't want to get showed before
Right,
the
to put
bell.
in the parlance of today's conversation. You see what I'm doing there, Kenny? Come
I see
on
what you're
now.
doing. I see what you're doing.
All right, now who can trade this strategy? Is it for everybody? Like, what do you need?
Well, I mean, it is for everybody, but to be a typical day trader, you're trying to get past that pattern day trader rule. We're doing, I tend to do, I keep it minimum. I'm doing 5 or 7 trades a day, but you can't even do that. Generally the minimum is the $25,000 in a day trading account. You get you over the pattern day trader rule. And I know they've changed the rules a little bit, but your standard day trader, 25,000, 30,000 in an account, and you have a good platform and you're ready to rock.
Yeah, obviously consult your broker. We are not your compliance officer. We are not your financial advisor. These rules are changing all the time, but this is
Yeah,
pretty accurate. It's been that case roughly for quite some time.
right.
Yep. And then here I think this is the biggest thing. We were talking about several times about coming in prepared.
Yeah.
As a former athlete, you were an athlete, your kids are athletes. Like, you can't just show up and hope to, get lucky. Like, you have to prepare going in. You have to be ready. You have to know what to look for. And I think this is that, is it not?
Yeah, I mean, again, that's why some people think these trades happen so fast, but then they're not fast because you're sitting there waiting. So again, I'm only doing 5 or 7 trades a day. For instance, yesterday on the Trump stock, I knew that stock was in play. That's where my focus was, and that's what I sat and watched all day. Those patterns will evolve throughout the day, so you keep it small. You got your 5 or 6 names, and again, when you were showing how many earnings reports come in, I know where to whittle that list down to. So again, I know where my focus is. And again, every morning, I don't really watch CNBC or Fox Business or any of that, but they do. They'll tend to mention the stocks that are in play right there, and then I go back and I check the volume. As long as there's volume, and then keep it simple. It's very just 5, 6, 7, 8. Then you're set for the day. Because again, as a day trader, what we're trying to do, make a day's pay, and walk away.
I can tell you for a fact, ladies and gentlemen, that I Kenny, I talk to every morning, and Kenny brings me names that are moving every
Like,
day that I can tell you for a fact I would not have noticed, would not have been on my radar. Because again, to be fair, I don't know where to look, and I just don't have the time. But I look at a lot of things, like a lot. Those things are just not to now on my radar. The fact that Kenny can then bring in something that I'm not seeing is really powerful. And the fact that I know that and he can do that consistently every single day. So that's why I wanted to introduce you to Mr. Kenny Glick, my boy. That is, from back in the day, friend of ours, like we like to say. Kenny Glick hit the bid. One of the all-time great names for anything. Hit the bid. So if you want
as a
to
shorter.
listen, if you want to spend your days with Kenny, trading, finding the fastest moving names, taking advantage of that intraday volatility, diversifying into additional strategies that are not correlated with some of the other things that you're doing, which is what I'm here to do. Join us every single day. Mr. Kenny Glick, 24/7 chat room. He comes in live every day, 8:30 with the names to watch, the names that are trading, be in there trading with Kenny. And then you're also going to get the multi-day money line tool, right? The actual codes that Kenny is using in Thinkorswim. Also, the Trading View codes are going to be available soon also, so that you could follow along. But even if you don't want to do that, because I'm personally not doing that, I just want the names. I just want Kenny to give them to me. But if you would like to do that, you'll be able to do that when you are an official member of Hit the Bid, Mr. Kenny Glick.
Thanks,
It's a
man.
great deal here.
Thanks, bro. Yeah, I mean, with that code, we used to sell that code for a couple of grand. Again, that was so special it was. Now, people are developing codes all the time, but this is the same one I've been using for 10 years. You know why? Because if it ain't broke, don't whatever that saying is, it
If it ain't broke,
works.
don't fix it.
Yeah,
So
it ain't broke, don't fix it. Right. Say that's the ticket. Yeah. So again, it's fun. Again, this is still fun for me. And like I said, I've been doing it since I was a kid. If you guys want to Google me and go down the rabbit hole, I was on 2020, 60 Minutes. I was on, if there was one episode where Ted Koppel ripped me apart because I was still living at home. It was crazy. Ted Koppel ripped me apart. I just want to give him a call. Hey, I'm still doing this, guy.
which is, I mean, not a lot of people can say they've been day trading longer than anybody in the world of ever, which is unbelievable. So Kenny Glick, everything we do at All Star Charts or through Stock Market Media as an overall, sort of technology company that's able to do all this stuff, and we could bring you, amazing content like Kenny Glick. Everything is risk free, right? So obviously, maybe not obvious to you, but to us, like we want to make sure that you're coming in here and you're getting exactly what you want. So there is absolutely no risk to you. You start 14 days risk free with Kenny Glick. But that monthly plan at 450 is a no-brainer. You want to save a few bucks and come in quarterly at 1200. That's fantastic. And if you really want to save a lot of money, you know that this is what you want to do. You want to make money every day. You want to look for those opportunities that wouldn't be on your radar otherwise. That 4,300 a year plan will save some money. So one trade pays for it all. As I've come to learn, all it takes is one, and that pays for Kenny Glick for potentially the next 10 years. And then you get Kenny for free. So it's like a call option after that. I really love that.
Right, right. That's kind of what we do. That's our goal every day is to make the 450. So if today again, we did it again today. We had a good day. I was doing a live show yesterday while we were shorting that Trump stock, and the stock got halted while we were short. It was pretty crazy. And again, if that was your first trade with me, you paid for your year right there in on the first trade. So again, yeah, I love the fact that we do the 2 week thing. I love performing like a dancing monkey, and I'm there every day from 8 to like 11:30. And then I'm getting old, so I kind of nod off for a little while. I come back late in the day. But you will, again, hope to see you in the chat room. I'm there every day. You'll hear my voice. You'll see my charts, and we're ready to rock.
Guys, click the link below. If you're not seeing it, just go ahead and refresh your browser, and it'll pop up there. Guys, you could join Kenny Glick first thing tomorrow immediately. We got a couple of questions coming in. Number one, regarding the charting tool, can you just show the slide with the charting tool so people know exactly which ones they're getting. This is exclusively for members of Hit the Bid. You're getting the 60-second, the daily, and the multi-day VWAP. You're getting all three codes.
Right. I'm gonna send you something where it builds it for you. If you can copy and paste, you'll be all right. And again, I'm hard of understanding, so I did a little video of a tutorial when you guys sign up. So it'll guide you right through, and you'll have the exact layout that I have out there.
We're getting some questions from the chat. Can you use this on ETFs?
Absolutely. I love it. QQQ is my baby. I've been trading it since inception. And, again, it's great because it's every stock you love. If you don't know the QQQ, you should. And again, if you're options traders, it has those daily options. So it is just, yeah, it's amazing. It could be used on futures. I love it. I don't trade futures too often, except when there's like some sort of chaos going on, like August 5th, whatever the hell that was. But yeah, when you see it trading on the futures, it's amazing. It really is, especially, and remember the flash crash. When you see these long-term VWAP plays come into play, even though we were crashing and there was mass chaos, that mass chaos ended up hitting an exact yearly VWAP. And when you see it, it's kind of hard to believe that it is all rigged. And when you have the rigging, it's like you're walking into a casino and the guy at the roulette table says, "Hey, buddy, 14 is going to be hitting for the next half an hour." Well, what do I do? Maybe bet 14 for the next half an hour. That's kind of what VWAP is. It really starts to show it to you. And again, sometimes it goes right to the penny. And that's why I love doing what I do. I show it to you every day. And sometimes, teaching the old dog the new tricks. When you see it, you'll never unsee it. It is like the Matrix.
Mr. Kenny Glick, so how do people log in? They get an email? How does this work?
Yeah, I mean, you're going to get your username and password every morning. Just click on the link. You'll hear me, yapping by 10:30, and then it's ready to go. You type in the chat room. And again, if you do make it to the chat room, please be active. I love looking at charts that you're looking at because, I know what I'm looking at. You don't know what you're looking at. So if you have something that you want me to VWAP, as we call it, and become a devout VWAPian, again, ask questions, be active in the chat room. I love questions. I love when people want me to look at their charts, their setups. And again, if you're not using VWAP, please just add it to your repertoire. Really, it'll change the way you trade.
All right. So after you sign up, you'll receive an email first thing tomorrow morning with a link to exactly where to attend the session for the day. Kenny, people want to know if everyone knows that this works, will it stop working in the future?
That's my father asked me back in the day, called the crowded trade. Everybody's in on something, it stops to work. This actually seems to be getting better because again, like we were saying, the evolution of the market, the quants and the algos and the high frequency trading, there's no doubt they're using VWAP. There's no doubt this is an institutional tool. So as far as not getting, starting to maybe just not work as well, absolutely not. The last 3 years, I've never seen it work this well. So again, the more people, the more better. And, I'm not changing a thing.
I love it. Ladies and gentlemen, Mr. Kenny Glick, I appreciate everybody being here.
My man, thanks for having me on.
You could be anywhere in the world, but you're here with us, and I appreciate that. Mr. Kenny Glick joining us today. Listen, we are incredibly blessed to have good friends like Kenny, really, really smart people. The fact that we can bring this to the audience is really, really amazing. So ladies and gentlemen, give it up for Mr. Kenny Glick.
Thank you. Thank you. If you like the Grateful Dead, you have a friend in me. I love music. And when there's no trading on, we sing and dance and we play some good tunes. If you like doo-wop, anywhere from EDM, techno to doo-wop, I was a DJ and we just have a lot of fun in the room.
Love it. All right, guys.
All right, guys. I'll see you soon.
I'll see you out there. Thank you. Any questions, let me know. And once you're in there, let us know what you think. We love it.
All right.
Adios.
Later, everybody.